Hong Kong is just a city, but this is not a regular city. In fact, when, in a recent study by, I believe that it is the Wealth X survey, Hong Kong is ranked number 5 in the world in terms of having the highest density of the very high net worth individuals, in which the definition is between 5 to 30 million US dollar of that net worth, which is pretty substantial. So again, Hong Kong is just behind, the San Jose, Basel, Switzerland, San Francisco in the US, and also Geneva. So Hong Kong is actually the first. It ranks number 1 in terms of the high net worth individuals in Asia. Now, at the same time, if we go one tier lower, we also have over 500,000 multimillionaires. The definition is over $1 million of liquid assets. So we are really talking about a city, but really have an enormous wealth. So that's why there's a lot of interest around wealth management, which is also a piece in which the insurance companies are also putting a lot of emphasis in. In the fast track program, at the end of the day, we spend quite a lot of time to try to reach out to each and every of the major financial institutions in Hong Kong. And we are very fortunate that we got some great support across the various sectors. At the moment, we have over 60 corporate champions. So these are basically ready buyers of fintech solutions that can address their internal needs. And they consist of the banks, the insurance companies, asset managers, and then also some major corporates, virtual banks, and so on. Now, and then as we look at the characteristics of the 60 plus corporate champions that are already on board with us, that are already potential buyers of the various fintech solutions, we have actually done some statistics that we'd like to share with you. Among the 60 plus, actually 24 of them are the ones with the headquarters in Hong Kong. So they make purchase decisions in Hong Kong. Now, at the same time, 27 of the corporate champions have Hong Kong as their Asian regional headquarters. So that means that they would basically make a decision. If they like to a certain solution, they will pilot it, for example, in Hong Kong. If they like it, then they'll roll it out to the rest of Asia. So this is why we see that Hong Kong is such an important springboard to help you not only enter the Hong Kong market, but also the regional markets.
What's really interesting here is that these companies need to be fully digital end-to-end. That's one of the requirements in receiving a virtual license. And they've all sort of designed a specific pain point that they want to get to. I think where it starts getting tricky as a new innovative company is when you try to do too many things and try to be all things to everybody. But these companies have all carved out something that they'd like to tackle in the first instance, right? So there's an approach for millennials, there's an approach for pet insurance, there's an approach for simplified health insurance. I think this is something that consumers in Hong Kong can easily relate to and then enter into a buying experience with a virtual insurer that's more simple and what we call bite-sized. You're not making a big commitment when you're engaging with one of these companies. I think it's still a little bit early to see how they're doing, but I find it very interesting how they're trying to market to the younger generation, how they're trying to leverage data to make decisions, and hopefully we see more of these coming in future.
Well, mainland China, is becoming one of the largest insurance market and also InsurTech market in the world. But at the same time, the population is actually having an awakening for the concept of insurance, because within financial services, if we take it as a consumer service, you essentially have a consumption upgrade from lending to insurance and to investment. Because if you think about the person's life cycle, when the person doesn't have enough wealth, usually lending is the product. But when the person just growing up and having the first family and having the first property, insurance is the right product. And then eventually when there's a lot of excess cash flow, the investment global diversification becomes the issue. So with a large emerging market, emerging middle class in China, you can see that why insurance is the place to be. And then if you look at how the insurance company spend their money, roughly 65% are on the sales, on the channels. And then 30% are on the product investment. And then the rest is on the internal efficiency gain. So therefore, from insurance tech, in terms of digital transformation, clearly the channel is the first part. And then having the core engine to make the next products will be the next.
Mainly focusing a lot on the customer interactions and distribution, because for a lot of insurance companies that we work together with them, we have seen that they have introduced like COVID-19 cover, free health coverage, or also like speeding up in terms of the claims payment to the healthcare treatments, as well as there are like discussion between on the travel expenses, travel claims for business disruption that is impacted by this pandemic. On top of that, with the shift of the workforce that we're seeing, just like in Singapore and Asia, we can see that in terms of the insurance agents, previously they have to fill out the forms, very manual in terms of the submission. There's significant increase in terms of like digital submission and also the regulatory aspect of like support in terms of like the approval of the policy.
Around the trajectory of the data and device integration, what we call the so-called interoperability, because at the end of the game is we have a lot of point solutions right now, you know, across different InsurTechs, and they introduce a lot of different things, right? From an insurer perspective, is how we do that, you know, how we integrate that, and also the continued developments in the how we actually embed insurance benefits into the end-to-end solutions, and which is outside insurance as well. That means non-insurance versus insurance, and how we actually have it integrate and have a seamless experience for our customers.
But looking forward, we're really keen on developing and integrating services into the insurance offering. So far, they've been quite independent, right? You have an insurance offer and you have a service which is normally positioned as a value add when you buy an insurance product. But perhaps, you know, we're working hard in order to change the relationship we have with customers and try to invite them earlier in the journey so we can work with them on prevention of events, be it a chronic illness or a serious illness and so forth. So, you know, we're keen on introducing technology and services, whether it's online or offline, in order to build a relationship with a customer and help them work towards preventing chronic illness, be it diabetes, cancer, cardiovascular disease, and not just be there when something happens and we're there to reimburse an event. We actually want to build a longer lifetime partnership with them.
Traditional organization structure of making sales offline and what we call the pyramid is actually crumbling at this moment for many traditional insurers in the face of digital challenges. And the product also needs to be custom fit, as we said earlier. And actually that brings to the technology challenges. At this moment, you know, we learn from, you know, many of the innovators that still, you know, 80% of the code of the core systems of global insurance companies are still in COBOL, you know, a computer language that was developed in 1959 for mainframes. And actually now many of the companies, businesses are switching to the age of the cloud native applications. So that actually takes a wholesale change in many of the systems that are online. So the same is for middle office, policy administration, distribution, and claims, etc. But you know, the challenge they have clearly is the demand is there, but then for large insurance companies, you know, fitting into the technology architecture takes a long time. The sales cycle is long. So those are typically the enterprise service companies are facing. And then, you know, it takes, you know, we do see that the accelerators from the Zurich, etc., are actually helping to shorten some of the customer acquisition process for those insurance tech companies.
On top of that, I think the last part, which I think a lot of insurance companies are actually looking at, is the sustainability and ESG in terms of like how insurance companies are moving towards green investment. Also like in terms of like the consumers, people below 40 are starting to look at, do I actually earn some green points for actually saving on the paperwork that is needed? So these are areas that I feel that for InsurTech company, we can actually bring in like an age where we work together with the partners instead of like looking at, okay, how can we actually disrupt it when we first started like 5 years ago.